Can I show number 3 and number 4?
Oh, great. Yes, thank you, Indira. Who's going to do number 2? Okay, your name is, let me guess, Anna. Да? Нет? Даяна, да, с вами мы еще общались. Юля, как ваше имя?
Стороженко. Это ближе к концу.
Что?
Если действительно ближе к концу.
Нет, я так, визуально делаю, пытаюсь вас. Do you see well online, guys? No?
Nope.
Is it better, Navy?
It's unclear.
Unclear?
Yes, no, the quality was better. Not the.
So.
No.
Yeah.
Thanks.
So Yulia will explain. Over. Hi, Mustafa. Nice.
Formula, so we just simply take coupon rate as a sum of coupon rate divided by 1 plus yield to maturity in the power of n. So then just we take face value of the bonds also divided by 1 plus yield to maturity in the power of n. And approximately 91.8.
Guys, in class, you have the same or different? Because we had some different versions of this exercise. Maybe you also had something not the same?
It's the same, yes.
Okay. Guys online, have you done this exercise? You reached the same data?
Yes.
Yeah, Fabian, another version with the same result.
Okay, Navy, can you comment your version, please?
I will post it in chat. Oh, it doesn't. Oh shit. No, sorry, it doesn't work in the chat. Shall I scroll my share?
I will give you rights. Can you show your screen if you want it?
Yeah, sure. Well, I'm used to do it like this one here. Of course, the one she did on the board is much simpler, but I think you can also do it like this. So you take 5% of 100, which is 50, and then you divide it by 1 plus, and yeah, 100 times 0.05, and then you have 50, and then you divide it by 1 plus your time maturity. I don't know how you call this, and then you do it for 5 years, and at the end of the year you just have to take the 100 face value in account, because at the end of the maturity you get this one, the face value back, and that's it. Then you have this number roundabout 91.90.
Do you understand well that your last, the last component of your formula should be in brackets? 50 plus 100 in brackets. Then divide.
Oh yeah, sure, yeah, you can.
Right?
Yeah.
Am I right?
To be formal, yes.
But you have the same answer.
Yeah, sure.
So I think that's the same basically, which is you provided the result without multiplication, right?
Yeah, just to show this version too, so you know.
Yes, thank you. Yes, thank you very much. Then number 2. Anna? Так, черненьким тоже. Anna, say hello to the guys.
Diana.
Oh, sorry, Diana. Diana. Почему вас? Да. Не могу сказать у меня, потому что она не через телефон. Слава богу, моя вина. Так, это что такое? So the common mistake that the other some guys did in the other groups was in the first task. Please continue, Diana. That some just took the coupon rate, not coupon itself, not the value of coupon, because coupon is a value, right? Knowing its rate, we can get, and knowing the face value, we can get the coupon value. So I hope nobody made that mistake that took just the rate, right? So you always need to apply rate to the face value, so you get a coupon. Только у меня вопрос, Юля, а вы уверены, что вы корректно написали coupon rate?
Там получается, если 100 делить, то там получается итог 88 и 91,8.
Number 2? Индира.
Нет, в первое, number 1. Не 100, а 105 надо поделить, нет?
Because do I understand well that this includes the last period as well, right? Yes. So, and that is correct. I like the way you present, because really it's one flow. It's flow from the coupon itself, and this is flow for selling a bond, right? And these are two different flows, and that's much easier to understand.
Okay, I understand. Sorry.
But thank you very much, Indira. It's very important that you asked that. That's a good question.
Yes, here I did in similar way. Here I calculated coupon and annuity on coupons. And here separately with face value of bond itself.
So what are your answers, guys? Yes. Do you have the same?
Yes.
Okay, good. Okay, I got also. Thank you. Indira, did you want to present these number 3 and 4? Was that you or who was that?
Okay.
Was that you, right?
Yes.
Yes, please. Guys, if you don't see well what we are writing, please let me know. I will adjust the camera.
Yeah, you just have to zoom out to see the answer of the second task.
Second, you don't see that?
Nope, not the answer.
I see. I think you see that. 81.97.
No, I only see here 81.
Okay.
Do you see my screen?
81.975.
Is it better now?
Yes, thanks.
Number 3 and number 4. In number 3, we should find real rate, and during this formula, it's 5.77%. And number 4, we should find NPV, and according to standard formula of NPV, it's 51.7.
Yes, please.
Discount numbers in both exercise.
Can you speak louder?
Should we discount cash flows in number 4? Because it was given in real numbers.
That's a good question. Just a second. While I'm searching for my file, can you comment? Anya asked, вот вы, Аня, я нашла Аню. Anna asked, should we adjust to create from nominal the real flow, right? Is that what you asked?
The numbers are already real from the exercise.
Can you show how did you do this exercise? And let's compare.
I'm not sure.
Let's discuss. Yeah, just let's discuss what is the.
Can I remove my screen because I don't see the board?
Yes. Okay.
I would say that it's correct to write this. Because the numbers weren't real, but I'm not sure.
Just a second. I forgot, Indira, what was your final?
My answer, 51.7. What about the percentages? There is 5 and 5 years a real discount rate.
Excuse me?
Why 150 and 112 or 20 doesn't divide by percentages?
Not divided.
Yes.
But you divided that, right?
Yes.
So you basically adjusted the nominal flow to real flow, right? Indira, is that what you did?
Yes.
But you, Anna, didn't adjust, right?
Yes.
But you think, so you think it shouldn't be adjusted?
Yeah,
Maybe.
it was given in real values.
What was given in the real values?
Cash flows.
Cash flow was given in
real terms. Real terms.
Real terms. And discount rate?
Yes, real terms, except.
So which discount rate we should apply? If the cash flow is in real terms, then discount rate
should
be real.
I mean, we should discount the numbers if it's in real terms. Isn't it like the values or these numbers?
So that's again the question. That's why I'm not talking to you. The question is, we have combination. The cash flow could be real and nominal. The discount rate could be real and nominal, right? Who should match? So Indira applied. Indira, did you apply nominal rate, right? Nominal and nominal discount, or what?
No, real discount rate, 5%.
To real or nominal cash flow?
Yes, to real, yes.
To real, so real to real, right?
Yes.
But this is, Anna, what you say, this you written, it's real also, cash flow, right? It's It's not nominal one.
I thought it's
Cash flow in real terms.
Yeah.
Yes, so you did the same.
But I didn't discount that.
Yes, didn't discount. You did not adjust to the nominal cash flow, but you took the real cash flow and adjusted and applied real discounting rate or nominal.
I didn't adjust.
Okay, let me say. Indira, can you again share your screen? Indira, may I ask you again to share the screen?
Yes, okay. One sec.
Anna, how did you continue? What the answer you have?
170.
Yeah, but the question is, I don't see the question.
NPV.
What? NPV.
Yeah, I thought that as the cash flows are given in real terms, 150, 120 are p-values. All of these numbers are p-values. That's why.
No. The real and nominal different on which component? On inflation rate only.
It doesn't mean that they are p-values already, right?
Oh, no.
Okay, so.
No. Any cash flow should be discounted. The question is, what is this discount rate? You see, it must be discounted. Otherwise, we don't get NPV. We don't include any discount inside. So, as you see here, we need to discount to get all the future flows as a present values. The question is, should we do something with this 250 or 120? Do we need to adjust on inflation in order not to get too many questions in our head? We just take the same approach to the flow and to the discount rate. They both either need to include inflation or both need not to include inflation. So the question is, which type of discount rate we are taking, right? So here we take real flow. But if we would decide to take, okay, I'm here, right, guys? If you would decide to take a nominal rate, so nominal is what? Including inflation or excluding inflation?
Excluding.
Excluding. Nominal? Including inflation, right? So will it be higher than real or not higher? Higher than real, right? So if we take higher discounting rate, we would need to do what? To adjust what? Cash flow on the same inflation rate to compare apples to apples, right? So nominal and real, the difference between them is just inflation rate, inflation gradient. Why, guys online, maybe you suggest, you think, you tell me, what is useful for projects evaluation and why? Nominal rate or real rate?
Real rate?
So guys online?
I think it should be real.
Where is our professor? Is she gone?
I think it's some internet connection problems.
Yeah. Guys, do you hear me?
Yes, I can hear you.
I just wanted to ask you, like, if any of you have a group for the next homework. I mean, if there is a place, because like I'm the only one now.
Sadly, my group is full. Maybe someone else has one space left.
My group is full too, so 6.
You can actually ask her if every kind of group is full, if you can join to a group, and then it's 6 people. And then, wait, how many people are we?
I already sent.
We are 5 members here in my group.
No one didn't answer.
Mm.
Okay, I think I will do it on my own.
No. Ask her if you can join a group which is already full of 5 people. So 6 people in a group. If it's okay, then actually you could join my group. I will first ask my group members if they're okay with it. If yes,
6, it's okay. It should be 5 or 6.
No, okay.
6 maximum.
Then let me ask my group, and if so,
if
then
they are okay with it, like.
Yeah, sure. Then I will send you the Telegram link.
Okay. Thank you.
No problem.
But how you will send the Telegram link in Teams?
Yeah, write me on Teams so I know that it is you, and then I will send you the link. If they are okay with it.
Okay, thank you.
Hi guys, I just enter from my computer and we are repairing the computer in class. Just a second. И что ж такое? Что, не могу даже фон изменить? О. Ага, хорошо. I will bring mine. At least you see me. Hi. So Asselbeck is writing. Okay, while Asselbeck is writing, I will continue what I talked about. What did I talk about?
Sorry,
Okay,
and what about the number 4?
Yeah, number 4 is correct. So you need to apply real to real rate. And I was discussing when we, okay, I'll repeat a bit. When we apply real rates, when we apply nominal rates, so for the projects, we don't apply nominal rates because nominal rate includes inflation, right? In fact, we need to include risks. It's not mentioned in these tasks yet. So we disregard risks, but at least we don't need inflation. That's what we are focusing. Why we don't need inflation to apply? I will repeat the guys in line, the guys who are in class. Because if we construct a project cash flow, we naturally want to say that the salaries won't be stable, and we feel we need to include in our cash flows salaries with inflation that we foreseen that they will change through the period of time, right? But from the other hand, we need to apply discounting rate, like apples to apples, also with inflation then. And that will spoil the whole picture because we will anyway eliminate the inflation by discounting rate. Why to spoil the project then, right? Why to put very difficult, not clear assumptions about inflation per year, so on, and the average in discounting if we don't need them finally? We finally need the net evaluation of the similar cash flow. So for real projects, I mean for the project, not for the bonds calculation, we disregard this factor. And that's why we apply real rate without inflation to real cash flows. Then we quite foresee, it's quite comparable that we still have the same people and the same salary level on board. And then we can compare business, how business is developing, not the influence of some economics on that will be anyway eliminated by discount rate, but the business factors only. And risk factors is the business factors, right? So when we do business, we do have risk much higher than if we just invest in bonds, right? That's why the risk factors should be operational risks, right? If we think we might, there might be a shortage of labor force in the market, we'd probably include the expenses related to hiring or maybe higher charges in future. I don't know. Maybe we open up or go into some innovative sphere. Then we will be, by understanding our costs, we will be including these risk factors. Business.
But I want to ask, like,
Yeah.
I wanted to ask, like,
что, почему? Excuse me, just a second. А почему у меня во время занятия? Хорошо, могу я вас попросить написать какую-то записку с копией мне, вот какую-то Рейза да, о том, что преподаватель, у него 40 уроков, правда? Чтобы я не писала эти бумажки. Поставьте копию меня, и мы будем, значит, отслеживать, что нам скажут на это. Потому что я не предполагала ввести грипприз из собственного телефона. Да? Спасибо вам большое. Ну, мне сейчас некогда, у меня всего одна пара. Да. Сейчас прыгать туда-сюда и перестануть все оборудование, нет времени. Okay, guys, we'll continue from my own notebook. Хорошо, что я взяла с собой. Okay. So, you understand? So, real to real could be nominal to nominal, not applicable, but in some practical life, you might find that people do this nominal cash. So they do include discounting rate. Just, you know, the interpreters, they interpret like that. Not everybody so well educated, right? But they still want to apply some discounting. So this mistake happens quite a lot in real life, where people include in their cash flow inflations, but they don't include in discounting rate, or vice versa. So your task is, when you see this kind of project, just double check and ask, how about inflation? Is it included in both, or it's better, it's excluded in both, it's eliminated, okay? So you apply real. So this is how we can, where is the number 5? This one, yes, right? Okay, the black one. So I shall be action. So can you explain a bit? Do you see, guys, the exercise, the solution?
Yes, a little bit. Yes, it's not better.
Okay.
We have to rate nominal and inflation. And with the features formula, we calculate the real rate that adjusted to inflation. And we have the investment in terms of 1,000. And we just found our investment in the end, at the end of the year.
Okay, and so finally we got 1,058.
Approximately. Yeah.
Approximately, okay, in dollars.
Yeah.
Dollars. Yes. So I hope everybody got the same. Anybody has the different solution or any questions? No? Number 5, 1,058. Guys online, you have the same?
Yes, we have the same.
Yes. What, you have problem? You have questions? Okay, then, okay, I will be helping Asselberg. Давайте. А вы видите, как там показано? Вот так. Вот так. Do you see well? Давайте я вот так подержу, а вы объясняете, если хотите.
So we get the investment, cash flow 0, cash flow at period 1 and 2. The investment was the $100 or rubles, I don't know. The first cash flow was 75 and the second one 60. We should discount it to present value. So the first cash flow 0 we don't discount because it's
zero.
Yeah.
It's starting at the base year.
Yeah. So we discount
which rate you apply?
I applied real rate because it's adjusted to inflation. It will be so include some risk of economics. Then to find NPV, we just you need to sum up all the cash flows, all the discounted cash flows. So I got 25,85.
25.85. Okay.
Why did you apply real?
So that's a good question. What would you do?
I applied nominal rate to cash flow.
What did you do?
Nominal.
Also nominal to nominal. Yeah. That would be more correct because otherwise you have a discrepancy between the inflation for the inflation.
Why?
Nominal rate does, right? Again, does nominal rate include inflation? Include.
Yeah.
But the nominal, but what is the flow? The real or nominal?
No.
So nominal rate to nominal flow. Because if you nominal, in your nominal cash flow, you do have inflation.
Okay.
If you do apply discount rate, then you don't apply inflation. If you don't apply inflation and discount rate to nominal cash flow, okay, guys, so nominal cash flow is a bit higher, right, than real. Your discount rate is not higher than real, right? So what happens with our NPV? Is it correct or overestimated or underestimated? Tell me. You think that? Again, your nominal cash flow is what? Higher or lower than the real? Higher than real, right? So we get like extra money, right? Extra expectations, the high expectation. And then we discount that without considering inflation. So the discount rate is smaller. Huh? So NPV is overestimated. You see, the NPV is overestimated then if we apply the smaller discount rate. You see the point? The two factors that are applicable in both elements, when not used in one of the elements, get us the better picture than it should be. You see that point? So better, in fact, better to create a real cash flow from the nominal one. So that is like recommended to do for the projects, to create a real cash flow from the nominal one and then apply real rate. But again, this happens that some projects are performed with that approach. It's a bit spoiling, it's more difficult to create, but it happens in life. So in theory, it's not recommended. In life that happens, and still it's better than different, right? Still it's better than to have different components in both sides, okay? Yes, thank you, Sudhir. So what is next? We have 6. Do we have just a second? I got my. Just a second. I open up the tutorial. Okay. I'll see. Maybe somebody has it opened. The tutorial 3. Do we have? What else do we have there? I think are the 3 exercises left, right? Я страшно технически оснащена, но не могу провести гибрид. Так, just a second, I'll open up back this. Hey guys, that is what we have. That is what we call disruptive technologies, right? And you can translate in Russian quite different. Some translate like advanced technologies, but I prefer to say really very dangerous technologies, new technologies, unpredictable. Just a second. So yield to maturity. Let's let me again. Now we talk about just briefly. Let's remind us. So, to which factor you can compare the yield of maturity if we talk about the project. So we've looked at the project, and now we talk about the bonds. This term yield to maturity in project terms. Which kind of parameter is that? Yield to maturity. And can you? Huh? Okay, that's really, thank you very much. It's internal rate of return for the project, because we really have options to invest in bonds or to invest in projects, and we need the rate of return back, right, with certain rate. So guys online, you hear me well?
Yes.
Okay, great. So okay, what do I see? I don't see myself. So the yield to maturity, it's similar to internal rate of return. And here, coming back to the exercises, I would need to discuss some issue and to ask you a question. Can it be so that we have, I will stop demonstration for a moment. So can it be so that we have NPV negative, but what could be error? So if NPV is negative, error is always negative, or what? What do you think? Let's discuss what could be combinations and what could happen with, what can be expected with NPV. Я уже не знаю, как на голову себе одеть этот компьютер. Ой, Господи. Сейчас. So, if you have NPV negative, what happens with ERR? So ERR, internal rate of return, is always then, if NPV is negative. What happens in the, what does it mean NPV is negative?
Investment is more.
We don't return, like we don't return extra than we discount it, right? Our internal rate of return could be, as you say, what did you say?
Bigger than.
So bigger.
Yeah.
Error is bigger than discount rate. You think that? Guys online, tell me, if error is bigger than discount rate, what happens with NPV? Anybody? If internal rate of return is bigger than discount rate, is NPV positive or negative? And guys online, anybody?
Positive.
Positive. Anybody else? You think positive or negative if ARR is higher than discount rate? Navy, what do you say? Navy?
Yeah, excuse me, could you ask the question again?
Yeah. If internal rate of return is higher than
Yeah.
discount rate, can we expect negative or positive NPV? Or
If
zero?
the internal rate is higher than the discount rate, then I think it should be actually a negative number.
Negative NPV?
Yeah, actually, wait, internal rate of discount.
Okay. Okay, I think the most of students say positive, and I would agree with them, because internal rate of return is something the project generates, the rate with which the project generates. If the discounting rate is 10, but the project rate is 12, so we get the positive NPV, that's for sure, that's positive NPV. That is the circumstance when ARR is higher than discount rate. Huh? But could be that NPV is negative, right? Then what may be? What did you say? I forgot your name. Federland.
I said that internal rate of return is bigger.
Yeah, but I disagree. Now, did you change your mind?
Yes.
But you told something else at the beginning. Before that, you told that is higher or something. No? Okay, then maybe somebody else goes. if I have NPV negative, what may happen with my ERR?
Less than discount.
Okay, ERR would be less than discounting rate, but is it positive? Always. Guys online, do you think if I have a negative NPV, my ERR is always positive?
No.
No, what may happen? How could it be?
I'm not sure. Maybe I'm just guessing. Maybe there could be a case that the internal rate of return is so small that actually, it's bigger than discounting factor.
Okay, so it is smaller than discounting factor, right?
Yes.
It's definitely smaller, but how much small? Can it be negative? So can it be negative? Okay, I'll help you. Yes, it can. I draw two arrows because in here it's positive error, but it could be also negative error. How that can happen that we have this difference? Of course, that's just negative, right? Definitely less than discounting rate. How this can happen? I will draw it here. Oh, just upper line. We have an investment, say, I don't see whether you see that. I will try to write. We have an investment like 1,000, for example. Then we got again net cash flow. Net cash flow from a little bit operating cash flow. Then we got here some payback, so on. So after which we got cumulated cash flow, total cumulated cash flow. Remember we discussed with which we go to the bank, right? In cumulated cash flow, after all these surpluses, we got plus 200. It's not yet NPV, but it's cumulated positive cash flow plus 200. Why it's not NPV? Because we need to do what? To discount. With that, we just come and say to the bank, dear bank, we got paid back, a simple paid back without discounting, so our cash will get more cash. So we'll get positive cash 200. And then the question is it enough? Is it a good project with this number of cash? It is positive 200, but that's enough or not? Then we do discounting. Okay, if we apply discount rate, I don't know, 10%, whatever, we do some calculations and we get NPV, which is again cumulated cash flow, but then discounted, right? We get NPV minus 300. May that happen? Definitely. So when we have this situation with positive before discounting and negative after discounting, then the conclusion is our ERR positive but not enough. Okay, positive but not enough. So it's very important which kind of rate we fix for the project as a minimum requirement, because what is that? It could discounting rate, again, two ways at least could be calculated, right? Based on real rate, nominal rate, adjusting the making it risk adjustment, so the full calculation. Or the other way, we can, at least three rates. The other, we can take from existing company, from knowing the percent it borrows. You will learn that later on when we'll study a weighted average cost of capital. But here we talk about cost of capital for the company, how much the company pays for the borrowings to shareholders, so on, to compose this specific formula for the company and apply this. Or we can take the other projects as an alternatives and saying to any other project similar, we will invest, we will get at least 10%. Why we should request here the internal rate of return less than we could easily get from the other side, from the other alternatives, right? So it's a kind of cost of capital composed of based on calculations or opportunity cost that we lose. So anyway, some minimum expectation. The common in all these approaches, it's a minimum expectation from the project. Below that, we are not interested. We just close up the project and go away. It doesn't worth spending time on that. Okay. Okay, is that clear? So that's why it's very important when we talk to businessmen and to the others that all the managers understand that it's not for free. The money that we provide them, not for free. We expect something as minimum. So let me. And one thing I don't have much time to recall, but one thing that I need to discuss with you related to cash flows as it is to the project cash flows. I remind you that we talk always about the cash surplus. We never recall in the projects, we never recall the term profits. Why is that? Why we don't talk about profits when we talk about long-term projects? Because what's the difference between cash flow statement and income statement or profit and loss statement? What?
I think,
yes?
Are you talking about the profit index?
Yeah, why we don't apply this term profits to our cash flow? Why we cash flow to projects? Why we cash flow based? Because
I think because the profit index is more of the revenue and then minus by the present value, which does not include the inflation rate, so it's not accurate.
I see your point, but yes, please, Mustafa.
I think it's because of depreciation. When we account for the cash flow, we also include depreciation and amortization expenses.
When we do cash flow, we don't include amortization, and because when we do cash flow, it places in investments. Okay, but in profit and loss statements, yes, you are right. We spoil our understanding of gains by including this artificial item, which has no relevance. So the theory of income statement, it's a game about annual receipts. It's a game out how much we earn within the year, but it doesn't apply the time value of money concept, because we are not talking about long-term things. In project, we are talking about long-term thing, and then we need to apply. We really need to consider when this or that money is spent, because we know it's different value. And can it be so that we organize a business which is profitable, but we have to stop a project as we don't generate enough cash flow? Can it be so that the project is bad from the point of cash flow, but good from the point of profit and loss? Let's think about that. Can it be so that we have a profitable business, we plan a profitable business, but bad from the cash flow perspective? So we have to stop at the point of time saying, even it's profitable, we have to stop. Can you tell me the example of that?
Maybe it depends on period.
Yes, depends on period in what? What can be, how the cash flow can spoil the good profitable business? Yeah. Yes, but what can happen in cash flow so that the profitable business had to be stopped? Huh? In what? Is now in what?
So Cash flow depends on the season.
So what may happen with cash flow? Just what may happen with cash flow? That
It could be negative.
can be negative, meaning we don't have enough money to pay as we planned, right? And as we have to pay. That's what may happen with cash flow, nothing else basically, right? With the cash flow, we may have not enough money in a certain moment. But how it's relevant to profit and loss? Can it be the situation where you don't have enough money in a certain moment and nobody gives us financing, but we are selling our goods with profit? We don't have enough money, but goods we are selling at profit. Isn't that?
I think yes.
Okay, well, who is that?
I think it's me.
Is that Maria? Okay. Who was talking?
T.
T. Oh, T. Can you explain, please, what this situation can happen?
I think there could be a case that you sell your goods, but it doesn't have that good liquidity, or maybe you are just selling and then they will pay you in the future. Then that could be the case that you don't have cash flow.
So goods don't have liquidity, or what?
To make it into real money. So it's just on paper.
So what is on paper? Cash or profit?
It's the cash.
Cash on paper or profit on paper?
Oh no, it's profit.
Profit, because profit, again, guys, profit, it's just a mathematical exercise, right? Where we just compare the price that we charge to our clients with the evaluation of how much resources we use for that. Like my computer, I want to sell computers, right? And I deliver this computer to my client and I record the sales. I've sold that, so I don't owe it anymore. I don't possess it anymore, right? But I don't talk about money. And my friend can tell me, oh, I'll pay it later. I say, okay, I still done my revenue. I've still done my sales, right? But I will expect the money from him later on. But to create this computer, I might get the components that I had at my home. Or maybe I borrowed these components from another friend of mine, not paying for him, right? And when I calculate it, I know that I used like 3 components, and in the market they cost, I don't know, 300 rubles. And out of that, with my own efforts, I composed the computer for 10,000 rubles. I definitely understand I have a difference, which is positive, and which I call profit. But what about money? Nothing, right? So until I got these credit lines, until I got this opportunity to use some resources without paying for them, I'll be all right. But at some point of time, when I'm stopped by my suppliers, right, I can't do anything else. So this is absolutely typical situation when you may have a good project from the point of profitability, but if you don't plan your cash flow properly and you don't distribute it in time, you don't synchronize it, you got a problem. That is how we expect this operating cash flow negative. Remember, operating cash flow negative, that is exactly the point problem. So if nobody would give us financing for that, we would have to stop the business at that point of time, right? So, and that is how we got a lot of companies bankrupt, especially, you probably remember a lot of stories about tour agencies, the travel agencies. Thomas Cook, in Russia we had Niva, huge company. Previous times, the Niva company, they organize travels to all the countries. They were like monopolists here, and a lot of other bigger companies. They may have very small their own profits, like they are intermediate chain, right? So they just charge the percent, some interest to these or that travel organizers, and what expenses they have? Just salaries and rent of location. That's all. But through them, it goes a big flow of money, big cash flow from their clients. Like if I buy a trip, I prepay for hotel, I prepay for airplane. So it's not the money of agencies. It goes via them. So the cash flow is huge. The revenue and profit is really, really small. The same happens in logistics. Logistics is it's a very brilliant sphere and industry because of great cash flows, of huge cash flows. Here is plus and minus. Because plus is what? They can generate money from prepayments of their suppliers until they are asked to pay for the ships, for again for tracks or everything. They can utilize this money, right, to put it for the bank percent or just for themselves. And that is how these logistics companies, this kind of service companies, they live not for the profit but for these bigger cash flows. So their main idea is utilize the big cash flows. And how they do that? Because time value of money. And I even know one state organization that I had a consultancy projects with. We started to rethink their budgeting, file budgeting model, because they didn't understand how to generate more revenue, to improve the efficiency of the business from financial perspective. And when we opened up their cash flows, it's occurred that they did not, they charged so small charges to the to public, right? Because it's state company, state organization. They almost had no charges to people who were using their consulting and so on. That was about housing. It was an organization that helped to find the apartments for the people who don't have enough money, okay, with some discounting rates and so on. So that was the business from the state business to help these low-income people. And through that small organization, providing services almost for free of charge, they had a lot of staff working. And so happened the government at that point forgot to finance, forgot to pay for this kind of salaries for the rent, so didn't provide finance to pay for the costs of this company itself. So what the financial director did, of course, they got a big flow for these apartments, like the big flow of money went through this organization, the state organization. And because of the gap between when they get that from the state or from the banks, and maybe 1, 2, 3 months when they had to repay to the landlords, they used these 2, 3 months to generate the income, to put cash on to deposit, to buy bonds, market securities, or whatever. That is how they generated the income. So when we opened up the plans, it occurred that they didn't have profit, operating profit, but they had this non-operating profit that was driving their cash flow. You see? Or the non-operating profit driven by the cash flow, the financing cash flow, which didn't belong to the business itself. So that is very important to project your. So if you have this type of business, your project can be huge and really this time value of money very concept very applicable. But the profit itself might be miserable. Profit from your operations. So the whole business could be made on these flows. Okay, I'll try to switch back. Окей, так. Okay, Again, we don't have time to switch off these problems. Let's move to the other task. What we had left with. Okay, these companies. Do you have the slides with you? The companies is expected to pay an end year dividends 5 this year. Was there somebody wanted to tell me? So, guys, in your tutorial, do you see my screen? Online, guys, do you see my screen?
Yes, we do.
Yes.
This company X is expected to pay, right?
Yes.
Anybody from you wanna tell the solution? Anybody from online? T, maybe you know. Maybe Christina.
Okay.
I will. Do you have rights to share your screen?
I am sharing my screen ready for number 2.
Did I give you rights?
Yes. Can you see it? I'm not sure if it's right or not.
Okay, just tell us what did you do.
So literally, the dividend is 5, and then plus the sale price is 110, and then just make it like 8%, then 8% plus 1, then it's gonna be 106.48.
Okay, you have the same? Yes. Okay. Yes, you did it absolutely right. Okay. Okay. Maybe next one as well. Others will help us. Who wanna? Maria, Christina, who wanna? Right. Company, if it does not flow. Who wanna?
Yes, probably I have some with
Yes, okay, we will.
well, this case is Do you see my screen now?
Yes, we do. Can you? Make it bigger a bit. Just increase the scale.
What?
Just make it bigger a bit.
Can you please repeat?
Yes. Increase it a bit. The fonts. Yes. So you have 12.5 and 333. So everybody has. Oh, thank God I finished.
Okay.
Yes, great. Thank you very much. Oh, came to the end.
Do I need to say something about it, or just it's okay?
Yeah, you can comment if you who told was not sure. What was the problem?
What?
Okay, Olga, you can say you can tell what is the problem if you had, or was that Te, right? Te, who was not sure.
No, I think there's no
questions
in why. So it's clear about dividend market price, and then I just have to divide my dividend by price, and that's how I get market capitalization rate. And in number 3, well, like we have dividends equal to $10, then market capitalization rate is equal to $8, and expected growth is 5%. Then we just take dividends and divide them by the sum of GR.
Okay, Te, may I ask you, is it clear for you now?
Yes, for exercise 2, yes.
Okay, what's your problem?
I was actually struggling to find the market capitalization rate.
Okay. Okay, yes, thank you.
Yeah.
Now it's clear. So let's finalize our tutorial. We'll start tutorial number 4. Let's discuss what is supposed to be. Anybody made it?
Can I switch off my registration?
With Apple and Coca-Cola, this you do have it? Yeah. Did you upload that, Asylbek? No? Yeah, can you upload that? So Asylbek with I will share Asylbek file. So we just look at this, and those who didn't do, just finish this at home and just try to make it yourself. Да?
Нет, это другой сейчас.
А что?
Сейчас я...
Ага. А туториал был Закиржанов.
Это другое.
Это неправильно, да?
Да.
Ага.
Думаю,
Хорошо, да. So in our tutorial 4, let me open another computer. Господи, боже мой. Так, что ж такое у нас? Так, tutorial 4.
А мы не видим ваш экран.
Да, сейчас я открою и обратно поделюсь, да.
Хорошо.
Угу. Спасибо, что сказали, да, не стесняйтесь. So for guys online, I just put this, I open up this tutorial for Seminar 4 with the task itself. So you can look at that. And you all have it in your folder. So, and now I'm opening what Asylbek have done. Just a second. And let's follow. So step by step. First of all, you need to derive the formula for the daily return of each stock. What you're supposed to do. Guys online, anybody can tell us for daily return of each
close.
What?
Open. It's like daily close minus daily open.
Daily close over the next day minus today, right? The difference, the difference that we have divided by what is the basis for division?
It's like no, it's like daily open price.
Okay, day open, so like previous day. Так. Да, я понимаю, почему-то. Все. О. Так. So we need to construct the table. That is how we look at Asylbek. I don't think I have the same for average. So average expected return course already happened. That's number 2. After we get this table with differences, right? With like daily deviations. We average this deviation for the first day. I need to double check. I think I have something. Maybe yes, was 0.9. You have here 0.88. It's basically the rounding. So you have the average for the first day, and you need to conduct this for all data. And thank you very much for Asselbeck. I appreciate very much that we have these specific deviations and very clearly disclosed all the data here. So daily return and separately the deviation at each day. Because that gives us, so for Boeing, we see here the deviation per day. And so can you comment, Asselbeck, what you do after you got this average and deviation per day?
So then we need to estimate expected daily return of each stock.
What do you do?
Expected daily return.
Yes, expected daily return.
Expected daily return is an average return because it's already happened. We don't need the probability of the prices. Then we need to estimate the return of portfolio compared to 40% of Apple and 60 Boeing. It's already the same.
Мы вас не видим.
Excuse me?
Мы вас не видим.
Do you see the table?
No.
No. Okay. Now better?
Oh, yes, it's okay.
So, Asselbeck, may I ask you just your point? You just get a quick tour through your file. So you do. So we had daily calculations. Then he applied a formula in number 3. He applied a formula of standard deviation, right? Can you show us the formula for standard deviation? Number 3, it was asked the estimate the risk measured by standard deviation of each stock. Did you get that?
But I think the previous changes didn't save on.
Okay.
It's not all the.
But the number 3, this after you got daily, after you got average, you need to get standard deviation using the formula or
Standard deviation we get for all stocks.
For each.
For each.
Yeah, per each company. Right?
We can just square it, no?
But okay. So the deviations we got here like per day, but then you can apply the formula which tells you what is the standard the expected, and after expected you got a standard which is typical, right? Then you estimate return on portfolio with this standard deviation. So the return on portfolio compared with 40%, what is the expected return? How did you expected portfolio risk? How did you evaluate that? Okay. Okay, so let's put it like that. So Asselbeck done a very good job. Thank you very much. We need to, we will next time, please all continue that. And let's check where we have the problems with formulas or something, because without Excel, we can't do that. I mean, it's difficult, we can, but that's worth it. Okay, guys, so finally, all the 9 points that we have, we'll double check quickly tomorrow, next week. And thank you very much for your patience, really. Okay. So, guys online, thank you very much for your patience. You have such a challenge.